Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with our analysis of the euro currency. As usual, we have prepared the fundamental report in the weekend, so it's a bit larger than previously. It's because currently we have a lot of information from the European Union directly. So previously we mostly operated with the data that we have from the United States, and currently it's in fact double volume of the information, because as you know, the inflation picked up in euro currency, and so lots of expectations around it. And coming European Central Bank meeting on the 9th of September, in coming week, it's at really big chances that it will not become blank as usual. So as Reuters poll suggests, that it's really could be announced the contraction of the PEPP program of the central bank. So it really could make the strong impact on euro currency, because based on the fundamental factors that we have, we suggest that we are starting to get the answer how the dollar index could hit our 87.4 target. It's currently become more probable. In our weekly report, we covered the problem of the delta variant. We take a look at the non-farm payrolls, take a look at the forecasts of the big banks on the gross domestic product in the United States, interest rates in the European Union. So it's really big amount of the information that we have covered, and that led us to take the broader view on the current fundamental process that stands in the relation between the European Union, Euro, and the United States dollar. And here we have, we see currently probably the new direction that is building currently. So it's a bit fragile because we do not see changes yet in market sentiment. And the commitment of traders report, we do not see yet the inflow in the euro. So the net long position keeps dropping, but we suggest that it might start changing as early as the next week. So we will see. Technically, the confirmation of our suggestion might be formed in the shape of the hand and shoulders pattern. So actually, we already mentioned it, and currently it becomes more and more visible here on the daily chart. Accompanied with the divergence, great thrusting action on the slope of the head, all this stuff looks positive for the euro currency. The concern about the OP target remains, that it has not been completed yet. But if we will get the new inputs on the fundamental background, particularly speaking on the inflation in euro currency in Europe, and changing of some policy and rhetoric from the European Central Bank, that might be the reason why euro could abandon the major OP target. So it could happen. If we will get the blank report and meeting on 9th of September, theoretically it might happen that market will erase the hand and shoulders, will keep dropping to the OP. It is possible. We will see. But currently, in the beginning of the week, our trading plan is very simple. First of all, we are not considering taking the new long position here, because you can see market stands at the major 30% resistance, accompanied with the daily overbought. And we should wait for a drop perfectly if it will be somewhere to the 1760, where the 618 support stands and where the bottom of the right arm should be. But also it's a 118 confidence support area on intraday charts that we also will keep an eye on. So for taking the long position, we're waiting for strong support areas where we'll make the decision. And in general, we are watching for validity of the hand and shoulders. That's important on the daily chart and the high time frame chart. In the shorter term, on the 4 time frame chart, for instance, take a look where we have all upward target had been completed. So we have the 1618 extension of the XA swing has been completed perfectly. Here's was 127, if you remember. Our ABC pattern XOP also is done right around the strong resistance that we have set on Friday. The one extension has not been reached, is this one. So remember, we have another XOP, additional XOP that stands at 1924 approximately, 921. It has not been reached, but I think that it's really not the strategy in the current circumstances. So what we are waiting for here, you can see two levels that I have mentioned. Perfectly, if it will be dropped to 1750, 1760, it should be a nice area to consider taking a long position and keep watching on European Central Bank meeting results. So it will be interesting as for bulls as for bears. So for bears, it might be the failure of the hand short starting dropping down. It will be a great signal for taking the short position. Alternatively, if market really will turn up here, this may be hand shorts with a large A, B, C bottom pattern with our prediction somewhere back to the 120 area. So theoretically, for scalp traders on intraday charts, here we should get some chances to go short. Based on the resistance, market will have some relief, I suppose, in the beginning of the next week before central bank meeting. So it will be some quiet time where some retracement could start to develop. And in general, well, it might be some patterns could be formed here for taking the short position. But currently, we do not see it yet. So here you could see that no bearish reversal patterns have been formed yet. So if you would like to go short, wait for some more clarity and wait for a shape the market will take around the top. If indeed some bearish pattern starts to form, then you could try to take the short position here. But currently, well, this moment this market has just touched the level. We do not see it yet. So that's our trading plan for next week. For taking the long position, we are waiting for support areas. Here you could decide by yourself whether you will buy here some part with the position, then wait for a drop and take another one, or you will be waiting for a direct drop to the 1760 to take the position. So it's up to you. That's mostly personal and depend on the psychology of the particular human being. So what is more comfortable? Here, both ways are acceptable. For taking the short position, as I said, just wait for clear bearish reversal patterns on the intraday charts.